Hey everybody, welcome back. This is Paul Cyan, and we've got Walt here for Green Chutes podcast number 2. Excited to continue on this journey. We were just chatting up here a little ahead of time, talking about land purchases by foreign entities, but before we even touch on that, I wanted to we had that big beautiful bill that just recently passed, and Walt and I had exchanged some texts and some emails earlier about what we thought, what he thought, him being the mortgage guy, what he thought would impact on rates. I mean, now actually looking at after the fact, after the bill passed, rates have ticked up small amount. I mean, from what I've seen, but what are you seeing on the ground there, Walt?
Well, so I think the bigger question and something I want to address here is just the confusion that a lot of people have that the Federal Reserve lowering interest rates is going to lower mortgage rates in our world. And there's so much confusion about that. And the first thing I have to tell people is that those things are not a direct reference to each other at all. So when we're talking about the Federal Reserve lowering interest rates, they're lowering, the short-term costs of money, and they're actually making it less expensive for corporations to service their own debt. And as a consequence of that, investors at the macro level that are looking at, hey, where do I put my money? Where do I park it? What's safe? Where can I make the most money and it'll be secure? They will keep their money in equities over bonds. So it's by lowering the interest rate, you could actually see mortgage rates, tick up a little bit. It's still, regarding this big beautiful bill, like you had said, we're definitely in uncharted territory. And the fact that we've still added trillions of dollars to an expanding pile of debt that the future generations are going to have to pay back at some point, or there's going to be hell to pay at some point in the future. We don't know when, but you and I have talked about this quite a bit. It's really irresponsible, and I think in the long term, when you see a government that expands and has more programs and pretends that it's solving problems when it's really not, you see the crowding out of private investment, and you know, you see people that it's very difficult to run your own company and run your own business, and you'll see more people not do that as a consequence of that, just because of the overall tax burden. Um, so that's where I would say, and I haven't read it. I don't think anyone has the time to read it, right? Like the politicians themselves don't even read it. But there were a lot of red flags in there, and the fact that it passed, um, I was more on the side of the people that wanted to slow down and wanted to debate it, or talk about it, or pull these things pull out these pieces and have intelligent conversations. But I just don't think that, it's so partisan. I don't see that happening. So
Yeah, there was some of the congressmen, especially just south of our border here, Kentucky, Thomas Massey. His big argument is, hey, we need to break these up. Not an omnibus bill that covers everything, but let's break them out into individual parts and go look at it that way. And there's a little more. It's easier to debate those and say, hey, no, this doesn't make sense versus this does make sense. But it's been a long time since Congress does that, and I think there's a big preference for the omnibus bills because it's easier to kind of push things through that not necessarily everybody wants.
right, and it's not right. It's not right to the public that we're promised certain things and then they're not delivered. And we
Yeah,
can talk about a lot of different things there, but it's just, I would say these high level people that purchase these politicians and that control the systems, if you will, need to open their eyes and start to pay attention that the public probably isn't aligned or in line with any vision or dream that they have for the future. So
yeah,
we need to get back to Americans, taking care of Americans, and we need to get back to worrying about our own businesses and our own people. So,
yeah. There's some of in the past too with the mortgage interest rates, especially that was the Federal Reserve was buying those mortgage-backed securities. which kind of give it, that helped push the rates down quite a bit. And that's, I think that's where you also kind of had that rush of buyers. It's like, hey, the rates are low, and then there was that all that stimulus that got passed, COVID stimulus. So that eventually just kind of pushed housing prices up. And now that we've seen the interest rates go up because the Fed is no longer buying those mortgage-backed securities, then we're seeing that things are slowing down in some markets. Some markets are still hopping for whatever reason, but there are other markets too. We're seeing on the periphery some of the bigger markets, California, Florida, some in New York, they're starting to face pressure now from higher rates, and just buyers basically they're tapped out. They can't afford the current homes today based on rates and current pricing.
And it's even scarier too, because then the people that are selling, they need their equity, and they need to find another place to live that's affordable. And so it still goes back to the affordability crisis in the country. Um, that one property you sent me to check out, I was like looking at that, and I was like, wow, like acres and the multiple buildings on the property, and that's just beautiful. Um, and I think that's where younger people, right, and people, if they want to have appreciation, if they want to make good investments, I would look for opportunities like that one, Paul.
Yeah,
Over time, you're going to see, the more rural areas become developed, for sure. So,
yeah. I mean,
you're
as city living becomes more expensive, they kind of have to push out, especially those who still have that ability to work from home. There's still some corporations who do it. As the federal government is taking it back, there might even be the local to state level, city level government employees and other corporate employees that are still allowed to work from home. So it might could be a benefit for them.
definitely. And if they have the option, that's where I would say to, personally, where I would look is kind of, off the beaten path, and you have to think years into the future almost. Is what is this going to be in 10 years? What is it going to be in 20? What is it going to be in 30? Even if I sell it right in a shorter span of time, just to think about those possibilities before you purchase and before you make a decision.
Yeah. Yeah, and going back to another point you made, that people need their equity and have their equities. I think that's the equity that's been built up in today's market. It's where we had those big issues in 2007, 2008, 2009, where there was no equity. We had a lot of these 125% mortgages. You had a lot of people who just, as the market declined, they already had 100% mortgage, loan to value, 125%. So they didn't have any equity to sell. But these days, it looks like with the run up in prices, plenty of people are sitting on equity. So I don't think you're going to see a lot of pressured selling where it's like, hey, you might see pressure because can't afford the mortgage anymore. My insurance went up or taxes went up. I need to sell, but it won't be that forced selling, or you need a short sale or a foreclosure sale. A lot of these sellers, they might have to take a little bit of a discount on it, but they could sell today and they'll still walk away with money, and no major impact to credit like they did back then, where people had to file bankruptcy or you got a short sale in your credit report or foreclosure that royally damaged your credit report at the time.
Yeah. And then the only issue is using your equity, and hopefully your income. If you're downsizing, if you haven't retired, you've thought it all out so you can get your next home, or your next place without having to jump through too many hoops.
Yeah,
So,
I mean, for
because
some
that's,
it might.
you won't, even 5 years back, and this. It's just you won't be able to find, what was $200,000 5 years ago is $400,000 today.
Yeah, yeah.
So,
Numbers went up, and so yeah, that's the put a lot of pressure on the buyers, and the sellers are kind of same time too. The sellers, if you need to sell, like you mentioned, that either you're renting or if you're going to buy again too, you need to, it's harder too. You got to find something you can afford. Taxes have gone up on everything. Insurance has gone up on everything. So even with the equity, you're more likely might have to downsize, because upsizing will mean costing much more, and the rates where they're at too. It's not always tenable for everybody.
definitely. And it just, at the same time too, one thing to comment on that is possible. And I was talking to someone earlier last week about this issue is, so you have a retired couple and they're selling a home in one place and they want to buy a similar priced home in another area, and they are on fixed income, Social Security, pension, and the concern is with rates being higher, even with putting 50% or more down, are they still going to ratio? Will they still be able to qualify? And thankfully, if you get with an experienced person, they'll know, hey, if we maybe we can use this pot of this for asset depletion, or we can look at this as income, or even a cosigner potentially. I think that older couples that are struggling with that, there's that they help their kids, and it shouldn't be, it shouldn't be a question, for them to reach out and ask their kids for help, because we've been seeing that too, just that those familiar, relationships and people helping each other more. And I think that the families and the people that do that over the next few years are going to be more successful than the ones that don't. That look at how we can, how the whole family can get better, because I know it's a tough time for younger people, to get a full-time job, but maybe they have a part-time job and they can help their parents, right, and together they can all win. So just have to be more willing to look at kind of outside the box situations to save people here.
Yeah. Yeah, that's one of the narratives I've been seeing too, is a lot of these corporations are not looking to hire, especially new hires, because of the with all this AI. It's still developing, still in this early phases, but a lot of these engineers, AI engineers, designers, whatnot, they're working on systems, replace customer service, replace, even online ordering. If you can order everything, hey, just, or even like ordering a pizza, you could do it online with an AI if you need to call in. Most of these days, everybody's doing it via an app or on your computer. It's pretty easy to do. But imagine you're on the road, you hit that little button on your car radio, whatever it says, order pizza from XYZ place. Then it's if you can do that by voice, and then it just confirms everything for you. Then that kind of takes away some of those entry level jobs, which a lot of college grads, that's what they use. They use those entry level jobs to build themselves up. Get that initial experience. Yeah, they show they're worth their weight, and then they get promoted within the organization. But if you completely cut that out, then they're kind of stuck, driving Uber, driving Lyft, which doesn't really give anybody it's kind of a temporary out. But on the long term, though, I mean, you're running, the excess wear and tear in your car is not being compensated for properly, in my opinion, by these companies.
Absolutely, and that's how they get you. Is schemes more or less like that. So you're sacrificing your car with wear and tear, and you're not you're a 1099 contractor, and you're going to have to pay taxes regardless of writing off your miles or whatever you do. Um, yeah, man, I think that everything I see makes it harder for younger people to get into positions where they can develop. When you look at just a fast food enterprise now, and you realize that, hey, when I'm in the line and I'm ordering my Big Mac or whatever, I'm probably talking to somebody in the Philippines or in India who's actually taking that order. So the reality is the Americans in the store that are working there aren't actually getting the customer service interaction, right? Unless they're inside the store. But there's more diffusion of skills, and there's not as much cross training of different capabilities in any of these places. And we're seeing it in mortgage lending as well, because of all the AI. When I got in, my job was to call people that, potential leads, potential people. Now we have electronic assistants that can do it. And what is going to be the future of our pool of people, right? Our applicant pool, and our people that are our loan officers and are able to explain things and help people in the future, when we just have AI that does all the kind of things that help you gain experience to where you can handle clients. So
Yeah, I mean, there's a lot
I
of it too. There was I forget the exact saying what somebody online was saying. If you're not exercising, you're interacting with people and chatting with everybody, learning about things, learning how to interact. You're kind of losing those skills, and especially even the critical thinking skills. If you're not doing the research on your own, you're not actually picking up a book or going online and looking at things. You're gonna miss a lot of those things. And so that's one of these things with AI these days encourages is, hey, just answer doesn't even force you to think. You can just go ask an entire question over there and it'll spit out where it found the resources, how it found the resources, how it applies to your problem, how it applies to your situation. And so you really don't need any critical thinking skills in that. You can just regurgitate that in and of itself. And so that's also going to be a little long-term issue for some people too, who rely too heavily on the AI for all that.
Well, it's the same thing as a human mind, right? It's like garbage in and garbage out. You're only going to be as good as your information and your data and your plan. And I think that AI is kind of overhyped, really, and we're kind of pushing children and younger people down a path where they are going to be hopeless. They're not going to be able to interact with people or be able to tell fact from fiction, or what the truth is, or hey, this, doing this to my body probably isn't a good thing, right? Like all these kind of issues, and AI is I honestly feel like going to exacerbate it. Now, for the smart business people that can take advantage of it and make the right investments and use it to organically grow a business, that's one thing. But I just see a lot of negativity with it. When I
Yeah,
see that people are getting $100 million sign-on bonuses from OpenAI to go and work for Meta, and I think about, all right, what are these, like, what capabilities would these people be bringing back and forth, or what is this technology even being used for to benefit people today? I I don't I'm not all in on it, to be frank. So I
yeah,
think it needs to be not regulated, but I think people need to look at it intelligently, and they're throwing all their chips into these pots, right? Just like with the whole crypto thing, and maybe it's not the best option for you,
yeah,
or for people in
yeah.
general.
Yeah, and from what I've been reading through some of these investment blogs and other places I look at, the talk is that a lot of these, like the OpenAI or the Meta or the Gemini, is that their AI systems are, they're fine, but they're not nothing that great. What I've been seeing is that I haven't seen any particular examples. I've kind of seen some people set up some systems, but some of these are talking about these open source, individuals basically, like the garage engineers, kind of setting up their own systems and designing it to do things. And so I think that's where we're going to see a lot of innovation and helpful innovation. Versus there's just a big money grab, as you mentioned, with Meta, and they're just paying people off the wazoo in order to get the most talent. When we've seen in the past, I mean, Apple was a garage start company, garage startup. Hewlett Packard, I believe, was a garage startup. There's a lot of these companies that are garage startups that multi-billion-dollar companies these days, but it happened with somebody tinkering in their house and figured something out and then going from there. Versus these big organizations, yeah, they can do some things. I mean, we have a lot of big organizations now that are,
You mean
you know,
hierarchical echo chambers don't drive innovation, Paul?
yeah, yeah,
Yeah.
somewhat. I mean, then there's always this, as I like to make fun of, that people say, why is this, why is big pharma the way it is? Why is big auto the way it is? It's shareholder value. We need to maximize our value for the shareholders, and a lot of that times that means cutting R&D. That means hiring more, laying people off, but then saying, hey, we need more H1Bs, which is also a big sore point. But it's like, that's shareholder value. It's not necessarily for the benefit for everybody else, benefit for the community, because if you ignore shareholder value, look at what the community needs, what your individual employee needs. You want to encourage people to have more kids. You want to encourage people to, be a little more relaxed. Then somebody can't be working 80 hours a week and then say, yeah, you should have a family. How does that work?
Yeah, and that's why one thing I'm thankful for, as far as Miami going there, was at the time huge into stakeholder theory. So it's not just about the shareholders. But stakeholder theory is more about looking at everything. So your employees, your customers, and everybody that touches your suppliers, everybody involved in the organization, and you develop a strategy with the shareholders to agree, right, that this is the way forward and this is how we handle this situation or that situation, but we're going to look out for the future first. And that's the issue, is they're all playing a short-term game, and surprise when it doesn't work out. It's just like they were never really, they were never really playing for the future, trying to help anybody. It was all about self gratification and greed and selfishness, and let's make as much money as we can right now, and not worry about the kind of investments we're putting people into. So
Yeah, definitely. I mean, it's always it's a balancing act. I mean, there's still some good companies out there, good corporations out there that that they're both positive, towards their community, positive towards their employees. I think it's Head is one of those ones down in Texas, which they're great for. Even if there's a natural disaster, they're out there telling their employees, "Hey, let's go." They're paying them, but they're saying, "Hey, let's start handing out help here for these people who just got hit by a hurricane." There's other companies who pay their employees well. I think Costco's known for one of those. I mean, it's a retail giant, but their employees love it over there. They're paid well. They've got good benefits, and then people still love the stock too. I mean, if you look at the Costco stock, it's pretty pretty richly priced, I guess you could say. But people like to invest in it, and people like to shop over there, and employees love to work over there. So it's great for everybody overall. Versus let's extract maximum shareholder value and nearly drive themselves into the ground, which some of these companies have done, and then you need to get new management in there to kind of clean it up.
And I'm one of the ruthless ones that says like they should be driven into the ground. Um, and I remember when mortgage rates ticked upward, and all these clowns, no offense, right, to them, but they're firing everybody, and they were misbehaving before that, and now it's coming around to get them, and it's a beautiful thing. And I think businesses and the world needs to cycle, because we have to get out the bad ideas and the cancer and the short-term players, so that all of us can kind of improve and remedy and fix the system at this point. So like in our world, when so many millions of young people don't have hope, or they don't think they can do what we're able to do in the long term, that's a problem. And
Yeah,
I think my frustration with older people in the banking industry is they don't think about that, and like I said, they're very short term, but they're programmed to be that way, unfortunately.
yeah,
So,
that seems to be the society in general. It's programmed for this short term, and just about all about me. Let's forget about we can grab everything we can at this point in time, and everybody kind of you're on your own for running to the exits.
well, man, and there will always be honor in the world, and there will always be people that have a problem with that. And like, I am never going to be one that looks at somebody's money or looks at what they have, and that's going to be the how I respect them. Because at this point, and anybody that's been alive and realizes not all money's the same. So,
All right, that was a good conversation. You got anything else you wanna cover?
um, yeah, I don't know, Paul. You got any questions, or that was
Uh,
a good? I'm hope I don't get us into any trouble. But we don't talk. We don't have to talk about the world events or nothing, because it's just like more ridiculous. But it's just like, all right, like who knows what the future is going to hold. We'll just keep moving while we can. So
yeah, maybe down the line we can have a private podcast for that with invite only.
right, and we can talk about current events and just craziness. But
Yeah.
yeah.
And we can wrap it up for today, and then hope everybody enjoyed the podcast. If you did, feel free to drop your comments. Let us know what you liked about it. Let us know if there's something you want us to cover in a future podcast. More than happy to do that. as maybe as we grow our audience, it'd be interesting to do like a live stream where we're both talking together and seeing if we get audience participation. Obviously, it's going to take a little time. We need to build up our audience here. If it's just the two of us watching, it's not much interaction there with the audience. But
we'll get them in. We'll get some interesting folks in. I'll pull in some people from the company here if we want. So we can get some guests though.
Yeah, that would be something in the future too. Add some guests, and it'd be pretty easy to do with this platform. But it was great talking with you. I'm going to wrap it up here for today. Thanks everybody for watching, and we'll see you in the next podcast.
Yes, sure. Have a great week, Paul. Have a great week, everyone.